Retail traders, they may be buying, but the street seems to be selling. We're seeing the markets on a three-day losing streak, the S&P having its worst day of June. What do you think is causing this big shift in momentum? Is it just Jay Powell, or is there something else going on?
I think some of it is we've come a long way in a short period of time, but I think a bigger portion of it is what you alluded to, which is the commentary from the Fed. So we've had two messages from the Fed, really. We've had a pause, which is great. That's dovish. That's helpful. That's supportive of risk assets. But on the other hand, we've had very hawkish commentary, and we've had the dot plot come out and show that future rate hikes are being priced into the market once again. And so I think investors are struggling with the duality of that message. We're sort of at a pause, but expecting worse to come on the rate hike cycle. And I think that's the short-term challenge that we're working through here.
Yeah, so if you look at the CME data just earlier today, it was about a 70% chance of a hike at the next meeting. Where do you stand? Do you believe that some of the things that Jay Powell was saying, basically saying they're not data-driven anymore and really pointing towards another hike, saying it's a live meeting, do you think that's just talk, or do you believe he's going to follow through?
Well, I think some of that is they're trying to hit two objectives here. One is to reflect current conditions, which they've done with the pause, and the other is to maintain some of the great credibility that they've built up with these rapid hikes in the past year or so. And so I think the guidance is really directed more at keeping those hikes potentially on the table. I lean more in the direction of lower probability of that hike. I think if we look at the conditions that have been causing inflation, whether it's money supply growth, which is all but dried up, supply chains, which have primarily healed. You look at inflation itself, it's come down pretty directly. So things are sort of heading in the right direction, and I expect them to lean a bit more on the current conditions side and perhaps stick with the pause. Okay. All data dependent, of course, in the next month.
All right, so you're a little bit of a contrarian. It kind of sounds like you're saying fight the Fed to a certain degree. I want to talk to you about something that we launched yesterday, the Magnificent Seven Index. We've been showing it all day here on CNBC. It fell more than 1.5% yesterday. That's the 7 stocks that really pushed the market higher so far this year. So what do you make of this pullback? Is this a buying opportunity, or is this possibly a sign that with another hike, investors are getting a little bit wary about valuations here?
I think in the short term, we could be struggling for the next couple of weeks with some concern over valuation and with that adaptation to a potential hike being on the table. But I think if you look out past the next Fed meeting into the second half of the year, I think conditions are clearly improving. Inflation's been getting better. We'd expect to see that follow through to interest rates and to inflation, or excuse me, to valuation. And you've seen earnings expectations tick up just a little bit after the past quarter. And I think some of the changes that companies are making in response to the economic conditions are pretty favorable. So I look for the back half of the year to be a little bit better and perhaps some struggle here in the short term.